My name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A second consecutive indecisive doji cross yesterday. This time, instead of a long tongue, we had a long tail. I suppose over 2 days you could actually construct one decent symmetrical doji cross out of both of them. But anyway, it seems the market is unsure about trying beyond the overhead flatlining medium moving average currently at 120.55, and also moving down to test the recent 50% Fibonacci line at 119.75, and also the short moving average just below that at 119.67. Finally, it seems my fears yesterday of a possible 3-day bearish evening doji star pattern, which looked very real at the time, have not come to fruition. So far today, a small sign of some bullishness, but has been extinguished. Caution, this market is trying to still make up its mind, it seems. Cable, aka sterling against the US dollar. An indecisive spinning top yesterday. The congestion around the March highs at 139.99 seems to have tempered the recent rise, maybe forming a 2-day tweezer top over the first 2 days of this week, though I'm still not sure about that. Below we have some congestion in the 139 to 139.18 area, and then the short medium moving average, currently 138.68, though to be honest the market did not pause there on its way up, so it may now be suspect. Overall, we're still well within the June to September 2020 bullish shift pitchfork. The lower time below currently at 137.06 and the middle time above currently 141.65. Please remember, this pitchfork has given a bullish angle of attack of this market since September of last year. So far today, not really much. A little dip now, looking like a small move down towards the short medium moving average. Euro against sterling. A second bullish white soldier yesterday, and a follow on to the previous session's bullish piercing line pattern. It also looks a bit like a hanging man pattern as well, though perhaps the most important feature was the close over the declining short medium moving average, currently 86.27. Overhead, we still have the close line of the April 2020 low, from which resistance hangs at 86.69. Below, and interestingly, the low of the last 2 sessions is this slowly rising short moving average, currently 86.12. Beyond that, we have the support from the base of the old descending triangle at 85.45. Now overall, with still a week and a half to go, we still have the chance for a monthly key reversal for April. Prices need to close on the 30th of April either above 86.70 or below 85.10 to make it happen. Currently, we've moved into a possible lesser outside month position right now. Now so far today, a slight edge higher, nothing very much. Could really actually just say it's just moved up a little bit from yesterday's close. US dollar against the Indian rupee. A new high for 2021 yesterday, edging just slightly over last week's high and seemingly edging closer to target X4 in the 75.80 area. That's the target for the double bottom formed over this year. However, though it was a second bullish white soldier, it was also an indecisive spinning top right at the height of the market. Not the most auspicious sign for the bulls out there. This 75.53 level is interesting, as it proves to be a high back in July last year and still seems to have some potency. So far today, a sharp drop. It seems the potency of the 75.53 level is having its bearish effect once again. This fall does 2 things. It brings to the fore the rising late March day uptrend, currently at 74.62, and opens the market to the idea that it may have either a possible double top over the last 2 weeks or maybe a bullish halfway hesitation. It's still too early to tell which one is which. US dollar against the Brazilian real. It was a Brazilian holiday yesterday, So 2 days ago we had a reactionary bullish piercing line pattern. This is a response to the market's move down and out of the recent sideways triangle, raising as it does something I cautioned about the day before, a possible false break. We ended the day right on the combination of the uptrend of the sideways triangle, currently 557.63, which is also the lower tine of the recent January to March bullish shift pitchfork plus its partner, the rising short medium moving average, currently at 557.43. Now, all this doesn't mean the attempt lower has failed. It just means there's the possibility of failure. That is all. I'll still keep, for the moment, the potential target below, but I will still not mark on the downside because obviously it has not been confirmed. I can nevertheless read it out to you. It's in the 541.5 area. But please be cautious about this. It is still early on. Just remember, 6 out of 10 times the break is on the upside from these patterns. Additionally, being so far along the triangle, we have a high degree of false breaks and pullbacks as well, something like 60 to 70% of the time. So please watch carefully. US dollar against the Mexican peso. A bearish harami yesterday, just after the previous session's reactionary combined key reversal up and bullish engulfing pattern. Yesterday was therefore not a follow-on to that previous action, but rather a reassertion of the earlier trend lower, highlighted by the move back down below the important early March to date downtrend, currently at 1988.18. To recap once again, the recent bearishness was a continuation of an idea I raised 2 weeks ago of, and I quote, recent action also leaves the way open for a possible descending wedge, descending triangle, or even double bottom pattern, end of quote. We've already achieved the descending wedge pattern target. What we now have are 2 possible head and shoulders tops. One from mid-January to late March and another from late February to early April. In the first case, we have an initial target X3 in the 1971.70 area, with a full target X4 down in the 19 even area. In the second case, we have an initial target X1 in the 19.5 area, with a full target X2 down in the 1885.5 area. This only leaves the idea of a possible double bottom, and that will depend if target X1 holds. However, as I've already stated repeatedly in recent days, all these depend on the market not breaking the steep early March to date downtrend. Denting it is fine. Maybe realigning it to a shallower angle would be good, but the essence has to be maintained if the bearish scenarios come to be true. That is what needs to be looked out for today. Well, so far today, seeming hesitation and a little bullish strength as well around the breached downtrend. This now starts to raise questions on the strength of the move lower and its ability to continue. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.